Is the Reserve Bank Governor even more bullish than Peter Switzer? CBA's first quarter profit result this morning and the Rio buyback. I'm Paul Rickard and I'm mad about money. Thanks for joining me this morning. Unfortunately, no Peter Switzer, so you'll have to make do with me. Now, given that he's not here, I can really get stuck into some of his forecasts, but for a guy that's nearly always pretty bullish about the Australian economy, he got outdone yesterday by the Reserve Bank Governor, Philip Lowe, who came out and talked about economic growth averaging 3.5% over the next 2 years. Now, the last reported economic growth number was 3.4%, and everyone said that was way above normal. And even the IMF has recently come out with a forecast of 3.1% for next year. So these numbers look pretty good. Is the Reserve Bank Governor smoking something? We don't know. But the point I want to make is that if growth is at that sort of level, that should be good for the share prices over the medium term. And notwithstanding what you might hear on the ABC radio or read in the Fairfax media, obviously the economy is doing a lot better than some of us want to believe. The housing market has not crashed. Sure, housing prices are lower, but that's a normal pullback after the gains of almost 60 to 80% we saw in Sydney and Melbourne markets. So don't read about that. I think what the Reserve Bank Governor said yesterday is pretty bullish for our markets. He's also, the central scenario is interest rates staying low for some time, but towards the back half of next year, if the economy really is ticking along and we're getting pressure from what's going on in the US, interest rates should start to go up. But take the outcome yesterday as a bullish statement. Now, let's go on to the Commonwealth Bank. We had profit reports last week from the three major banks. Westpac came out on Monday, a good result from Macquarie. They were all better than the market had expected. That was the first point. Secondly, Commonwealth Bank's come out with a first quarter trading update today, and this is also better than the markets expected. It's announced a cash profit of approximately $2.5 billion for the quarter. Now, operating income was up 1% on the average of the previous 2 quarters. Expenses were down 1% on the previous 2 quarters. Bad debts were down 11%. That was a common theme with the other banks as well, leading to a cash NPAT up 3%. That's the September quarter versus the average of the first 2 quarters on an adjusted basis. That's not too bad. You've got to be a little bit careful because for Commonwealth Bank, the number of days in a quarter is very important because it's an income interest business. You get paid every day, you get paid on Saturdays and Sundays. So the number of actual calendar days in the quarter is important. Unlike the other banks which report in September, Commonwealth Bank reports at the end of June. And so the days in the quarter are quite different. This quarter, the first quarter of 2019, it had 92 days in it. The average of the first 2 quarters or the last 2 quarters of the first half, the second half of 2018, only 90.5 days. So the result's not quite as good as it looks, but I think the market's going to like it. Importantly, they had some volume growth. Home lending up 3.1% compared to the balance at the end of June, and deposits up 8.9%. So look, there's certainly some work. Commonwealth Bank's got its challenges dealing with the Commission, but it looks like it's heading in the right direction. So what does all that say in terms of the markets? Banks are still cheap. Notwithstanding what you've read about the Royal Commission, these reports aren't too bad. The dividends, I think, look pretty secure. So I think that's setting us up for a good day in the market. Obviously, we've got the midterms to worry about, but you get a sense that October is over. This is November. A Santa Claus rally, I think, is looking more and more on the cards. Okay, finally, the Rio buyback, share buyback. This closes on Friday, 5 p.m. Western Standard Time. 2 rules about buybacks. They're great for low-rate taxpayers. If you're a high-rate taxpayer paying tax at 30% or 47%, don't even think about it. Throw the offer booklet in the bin. Low-rate taxpayers, that's, for example, a self-managed super fund in pension mode, paying that tax rate of just 0%, or even a self-managed super fund in accumulation mode, paying tax rate of 15%, you're pretty mad if you don't accept. They are tax transactions. So if you accept in a buyback, you've then got to decide to do what to do with the cash. If you like the stock, buy the shares back on market again. That's the rule. Okay, 5 o'clock on Friday. The good news is that it's for pricing purposes, Rio's share price is back over $80. I think it's going to be a pretty good outcome. I'm actually going to use it away in my self-managed super fund just to reduce my exposure to the materials sector. It's not that I don't think they're still on an uptrend. I just think they've had a pretty good run and it's time just to pull back a little bit. I do think if you're worried about the tender, forget all the stuff they sent you. Just tender final price. Let the market decide what the actual discount will be. It'll be 14%, but let the market do it. Anyhow, 5 o'clock Friday, Western Standard Time. You can go online to accept. Okay, really important. And then BHP buyback is coming up. We'll talk about that in coming weeks. That's all we've got time today for. Thanks for joining me. I'm Paul Rickard, and I'm mad about money.
Content has been prepared without taking account of an individual's financial objectives, needs, or financial situation. It does not constitute formal advice. Before acting, any individual should consider the appropriateness of the information, having regard to the individual's financial situation, needs, and financial objectives. Past performance is not a guide for future performance. AFSL 286531.